People are scared and they think inflation is coming.
If you just buy gold and silver for the long term, all you're doing is hedging against inflation. I'm not interested in the whole gold and silver thing. I'm basically not paying any interest on that debt.
Inflation affects asset prices, right? The value of everything goes up as the cost to build goes up, as the cost of labor goes up.
I always say to myself, there is no better time to build than today.
When's the best time to plant a tree, right?
Right now, like short-term debt is a little cheaper.
We're trying to roll out some kind of a better retention process there across the portfolio.
Welcome to our weekly headlines and Project Pearls. Headlines, a segment where we take relevant news stories from this week and show you how they are influencing our personal wealth building actions in real time. And Project Pearls, where we pull back the curtain and share real lessons from our real deals. We have an excellent show today. With me is the Sultan of Smart Money, Dr. Reed Faldet. Reed, how we doing today, brother?
I'm good. I'm good. Still living in the chaos of home construction. I'm killing flies and bugs left and right because everything's like open. I mean, have you experienced? They just,
Your
I
your
just,
house is basically a porch.
yes, that's how it feels. And I'm like I have to tell like the crew, I'm like, guys, can you like shut the windows or like put the screens on or like
Yeah,
anything to keep the bugs out right now?
yeah.
Um, so yeah, that's a good time.
It-
Yeah.
if you guys aren't watching on video, Reed looks like a raspberry today. I thought he had a sunburn at first, but instead the guy is just the man. He just works out hard. And so Reed recently got done with his morning workout, health, wealth, family, freedom. So Reed is a living testament to staying healthy and appreciate him for that. Um, all right.
What we
Reed.
got?
Um, Looking at the headlines right now, a few things have piqued my interest. Gold and silver prices, um, jobs market, and the government shutdown. Gold and silver prices, I always look at gold and silver as just inflation, right? If you just buy gold and silver for the long term, all you're doing is hedging against inflation, right? You're not actually making any real money. The only people who make money on gold and silver is people who sell gold and silver as a business or people who are timing the market on gold and silver, right? Traders. So when you see gold and silver just skyrocketing, what message do you take home from that?
People are scared and they think inflation is coming, and so they're trying to hedge against it the best they can. And that's where their money goes into the safe haven of gold and silver and valuable metals and commodities. So gold
A
and silver,
hundred percent.
yeah.
100%. Um, I'm not interested in the whole gold and silver thing, right? Like I said, because you can't make money on it unless you're just trading. And trading is mostly a guessing game, just like with the stock market, right? Most people lose. And I'm not a professional commodities trader, right? So where could I win in that? So yeah, I don't feel any FOMO. I don't allow shiny things to affect my investing plan, right? But I do notice that, like, okay, so a lot of the institutions are thinking there's going to be a ton of inflation.
Mhm.
Um, and when I look at inflation, the best strategy I found, like, when do I like inflation? I like inflation when I have long-term fixed debt, right? Because um if I borrowed money at, let's say, like a 4% interest rate and inflation's 4%, I'm basically not paying any interest on that debt. That's kind of how I look at it in the simplest version. Um, like when you're a dental school graduate and you have, like, a 30-year debt on your student loans. Well, if you get a low enough rate and you get it fixed, well, you kind of love inflation, right? At least for that. And then with my buildings, we've talked about this before with multifamily, you know this very well. Like, if we get agency debt going, we get 35-year fixed term debt, oftentimes, especially next year with the interest rates looking like they're going to go down quite a bit, we can get fixed rate debt at like 4%. Again, if interest real inflation is like 4% or more, like it's like free money. So,
Mhm.
yeah, I don't like inflation in some ways, but I'm going to position myself to acquire as much fixed debt as possible. And because we don't have a solution for this inflation, right? Maybe it'll take 2 years to go away, maybe it'll take 10, I don't know. Um, that's my strategy. What are you thinking?
Yeah, I mean it's the same and inflation affects asset prices, right? The value of everything goes up as the cost to build goes up, as the cost of labor goes up, right? Like ultimately it drives all assets up. So if you own an apartment building right now and the cost to rebuild that apartment building is going to be higher than it is now, then you secure low interest fixed rate debt. You buy the asset now with today's dollars, and over time, it's going to keep in pace with inflation while your dollar, the value of your debt is, going down essentially. So it's a self-liquidating asset at that point, or self-liquidating debt.
Yeah. Whenever I'm about to build an apartment project, right, I look at the numbers and I always say to myself, there is no better time to build than today
Mhm.
because it's only going to get more expensive in the future, right? And what is more expensive in the future for me, it's a hedge against competition, right? So if I build today and I'm building at this price or with these energy codes that cost me less, every couple of years they up the energy codes, which increases the costs as well. So it's like now is the time to build. So
Mhm. When's the best time to plant a tree, right?
yep, yep,
It was
100%,
20
man.
years ago. Now it's now. Today. Next best time is
Same
today.
same concept.
No?
Okay, jobs market. What is the jobs market telling you when you're seeing kind of the numbers get readjusted to be not nearly as good as uh as the government was reporting, right? They all got adjusted down. Like things aren't trending in the right direction for jobs. Well, what do you
Yeah.
take home when you hear that, when you see that?
Well, I mean, that's it, the whole labor market, right? You're just looking at the whole labor market, and as the labor market weakens and jobs data keeps reporting down, meaning either fewer jobs are added or even goes negative. I mean, those are pretty strong indicators of a recession, right? Like because as more jobs come offline or fewer jobs get added, however you want to think about it, the net either being neutral or negative is not a good thing. People don't have a job, they don't have income, they don't spend money, right? So basically, when the Fed has two mandates, which is one to control inflation, the other is to help the labor market, right? And they're looking at those two things and trying to balance them out. As the labor market weakens, it puts greater pressure on the Fed to drop rates.
Yeah.
So yeah, that's kind of how I look at it.
So rate cuts are coming. So what does that mean? So that means like if I'm building and I'm going to refi the agency debt in, 2 to 3 years after I start construction, I'm liking that, right? I'm liking that trend. If I'm
Yep.
buying real estate, I want to buy real estate and you can do this is a little riskier, but right now, like short-term debt is a little cheaper. What you could potentially do is you could take the risk. You could buy short-term real estate at today's dollars, right? Valuations are down for people who are trying to acquire, and then just expect to refi in a year or two, right?
Yep.
If you wait 2 years, right, all the prices, all
We'll
those
shoot
low
up.
interest rates are going to be reflected in the price, right? Now you're going to be paying a way higher price. I was talking to a broker yesterday. He said he had like 29 deals like happening right now. Like he goes, dude, after that last interest rate cut and people see like the Fed plot, like they see where interest rates are going, like things are heating up. And then the
Yep.
second piece to this is actually the 100% bonus depreciation too, right? A lot of guys are trying to get that bonus depreciation before the end of the year. So those
Yeah.
two
Huge.
combos together is what I'm seeing. And
Yep.
then I feel like with the jobs market, the government shutdown is the same thing, right? It hurts businesses, but it really hurts economic confidence, right? Like everyone's like, oh, less confident, things are shaky, right? When are things coming back? And I think that just further props up these like ideas of rate cuts. Now, I read an article this morning that the Fed has two more meetings this year. They made 2 points in the article. They're like, one, the Fed has probably been a little slow to cut rates because they just don't want to look like a peon to Trump. They want to look like they're doing it at their own pace. But
Yep.
then two, they're like, the Fed, just like when we were in COVID, they can have emergency meetings and cut rates. They don't have to cut rates on the meetings. So he wasn't going to be surprised if they made three cuts before the end of the year. So one at each meeting plus one more. Who knows? But just the general sentiment is we will see rates getting cut. Yeah.
Yeah, and I read the same thing. Basically, they feel confident that if they're too slow to cut, it doesn't matter because they can do rapid rate cuts, 50 basis points, full points if they need to, if it's in a true, a true kind of crash recession type thing, which
Yeah.
that would be really interesting. I don't know, where you're poised at that point to take advantage of that if it does and when it happens. Yeah, so that's an interesting character that just walked behind you.
Well, this is downtown Seattle, so you're gonna see a lot of interesting characters.
Interesting characters.
Oh man, it's been the kids are getting a real awakening.
Well, are you
Like,
getting asked questions that you know how to answer? That's always
oh man. Yeah, they've been pretty good about that, but I don't think they noticed, but I definitely saw like three call girls.
oh
We were by the Pacific, the Seattle, like the Space Needle and the
yeah.
Pacific Science Center. We were eating dinner at this little Thai restaurant. It was still there from when I was there in college. I was like, oh my gosh, this is great. Uh, but yeah, I definitely saw like three call girls at different times walking down the street. I'm just like watching my kids. Are they registering what's
Good
going
play.
on here? Or do they just think we're at like the beach or something? Like, what's going on? Uh, Project Pearls. Anything pop up, the last couple of weeks on any of your projects that you're like, oh, this is a great like point of clarity or learning opportunity?
Yeah, so I just was came off of all of our asset management calls, and one of the problems we've been there's kind of a twofold, and I liken this to like a dental practice, especially a GP model, where you focus on retention as well as like new patient flow to ultimately grow your active patient base, right? So right now what we're trying to focus on is both tenant retention as well as the lead to lease process, and really trying to tighten that up, because what I think not enough attention, in my opinion, has been focused on retention within our properties, because every time you lose a tenant, you incur the cost of a unit turn, which even if you were to give a little rent concession to that tenant, it'd probably be worth your while to do so to avoid the cost as well as the time in having that unit down while you turn it and waiting for the new lease to happen. So we're trying to roll out some kind of a better retention process there across the portfolio. Um, and then on the lead to lease process, there's always, we've talked about this before, but right, there's a funnel of leads to phone calls to showings, and then whether they lease or not, and whether they're a qualified applicant. And we feel like that bottom end of that conversion is lacking a little bit from showings to lease. And so we need to dig in and get the analytics as to why, right? Get the feedback from the tenant to see if is it something the way the property is showing? Are we not following up with them? And so, I mean, it comes back down to marketing and sales and conversion a lot of the time. But yeah, so a lot of parallels with any service-oriented business. And yeah, and I see those parallels in dentistry and in real estate.
Yeah, those are good points. All about the operations, just like a dental office.
Mhm.
So in ours, a couple things I've been processing lately is really building. Townhomes have great numbers, for sale townhomes right now. I was at a conference in Colorado for the dental group I'm a part of now, and they're great. And there are a bunch of like Toll Brothers, townhomes like across the street. Across the street's not close there. There's big spaces and everything. But so I took a walk as soon as I went there and toured these townhomes, tried to figure out what Toll Brothers was doing. It's really interesting. So they have like, narrow townhomes now. Like this isn't urban. This is like out towards the airport. 17 square foot, 16 and a half square foot, not square foot, a width to these townhomes, right? So you're getting like these narrow townhomes they're building, and you're like, huh. And then they also have some 2-story and they also have some 3-story, and then they have like the 20-foot wide, the 22-foot wide. So, you really need to think about who your target market is, right? 55 and up, especially like 60, 65, they
Yep.
want
Single floor
primary
living.
single floor living, right? So
Yep.
they're not targeting those folks, right? And
Mhm.
then families, right? I don't know, 17 square foot sounds pretty narrow, right? That reminds me of like Notting Hill, the movie. I don't know if you've ever seen that, like a really narrow, like
I'll
in
look it up.
London. Yeah. So it's like, um, you really need to think about who you're building for first and then build to that with townhomes. You need to be very thoughtful. Same with like cars. If you're talking like a 55-year-old, they're going to want plenty of room in their garage to park their cars, right? So you got to go at least 21, 22 feet wide. You can't do 17 one car, you can't do 20 and like two cramped cars, right? Unless they're one car folks. So you just really, it's so important to build your townhomes to your avatar. Don't want people to miss that. Another pearl I've learned, we've talked about, I made a post about tenants in common, right? Tenants in common is another structure besides LLC for partners. And the big advantage to tenant in common, as long as you protect yourself legally with like your LLCs invest together into this tenant in commons agreement instead of you guys owning in an LLC, is you guys can 1031 out independently, right? Another advantage on these is when you're doing larger project with lots of folks, if people want a 1031 in, you just set up a tick structure again where you keep it open so you can have multiple people 1031ing in through their entities, because they have to keep their entity that they're selling their project with to come into your project. And
Sure.
then your like main project LLC is part of the tick, and then your 1031 folks are part of the tick too. And you don't even need, you can always adjust the shares later. You can put that language in your legal document. So you can typically, um, like if even if the ticks fail, like if a couple of them don't end up happening, it doesn't like it's fine. You can just readjust shares based off of the equity. Anyway, so like, yeah, so ticks, folks like definitely use that tool for those two reasons. Either doing partnerships, for exiting
Are you,
partnerships or bringing partnerships together.
are you doing this? Are you working through this right now on a new project or an existing project, or why is it applicable right now to you?
Yeah, yeah, yeah. So, um, I love buying and holding, but I also like to, once I've got something stabilized, I've added all the value, my return on equity invested,
Yep.
that number tends to get small, right? And so I've got a bunch of developments going. So I think I'm going to sell some of my old buildings, roll that money into the new buildings, and I don't want to pay capital gain tax and I don't want to pay depreciation recapture tax, right? So I'm gonna roll some of them. If I've owned them less than 5 years, I tend to 1031 them. If I've owned them more than 5 years, I'm not really worried about depreciation recapture so much. So I'll use them for like OZ. I'll do like OZ stuff like I do with my dental practice equity when I sell. Makes
Okay.
sense. So yeah, best way to not pay taxes on real estate, 1031s or OZ. Best way to not pay taxes on dental practices when you sell them. If you like real estate, OZ. If you don't like real estate, you just like stocks or whatnot, you can do like a PPLI type insurance plan. But you got to be high net worth to do that, like
Because the
20,
setup
30,
costs time.
20, 30 million. Yeah. And then like you can do like a charitable remainder trust. But if you're young, that kind of locks you in. If you're older, it's not as much of a big deal. But anyway, so just some pearls for folks. We can talk more about those on another
Sure.
show.
Sure. No.
Another thing I've been, two other pearls I learned. One was vending machines. So I'm seeing all these vending machines with food in them. And I think, like the DoorDash like society we have today, I'm really looking to add value to my developments. And once I get more focused on operations, less on development, I'll dive into this more. But vending machines, I think, are going to be important. I think, like I'm at the hotel, they got one that's got hot pizza in it, right? People can just swipe their card and get hot pizza,
Hmm.
freshly stocked every day. I'm like, okay, this is cool. So I think that'll be a revenue source. I mean, other stuff that pops up in my mind that we can talk about in another show is like detailing, right? You make detailing easy. So the detailer comes in, details people's cars, and you get a share of that, right? So lots of stuff to talk about there.
Interesting. Yeah.
Um, Another pearl I learned was, I'm doing all these projects, development projects. I got like 8 going. It's just so expensive to pay for all the permitting, the architectural engineering up front, right? I mean, I could outlay 5 million bucks pretty quick. So one thing I've been talking to my architectural engineers about, the ones I've been working with a little bit longer, is, hey, can I just pay you when we get our loan?
Mm-hmm.
So now, like all that cash outlay up front. Now it's not going to
Soft
work on
costs.
every project or with every architect or every engineer, but that's a great way to free up cash flow. And so I'm definitely going to use that for like my portable, my mixed income projects, for the community impact, the ones we're doing with the city, to help on those, because can't get any of the city money we've been awarded until you close on the loan. So it's all got to happen at the same time. So
Does it is it easy to get them to agree to that? Because they would think that they would not want to delay payment until the loan is secured. I mean,
yeah, I think once they know you're like solid, right? They're like
you
cool to
you
it.
finish.
I
Yep.
think my engineer too was like, yeah, just it's like 105%, right? So that 5% carry in their mind is like an interest rate.
Sure.
Um, and
And it's worth it.
yeah,
It's worth it to you to do that 5% bump in compensation to delay to the loan. Otherwise, it's not fun to carry those costs. And it just hurts your return when you have to put more money in soft costs on the front
yeah.
end.
And things might be slowing down for them a little too. I don't know, but things might
Yeah.
be slowing down, or they're trying to grow, which means they need the business, right? So,
Yep. They'll take the AR on themselves just because they want to keep their staff busy and everything, which makes sense. We're dealing with that too right now on a development project. The same thing, trying to roll to pay them upon with loan proceeds rather than front load all the soft costs. Trying to do the exact same thing. Those add up pretty quick. Those architect fees, civil, it's crazy. That's a good business, right? Sometimes I think about it. They got a small team and it's like a decent business.
architect, yeah.
Yeah.
Um, Civil's got a lot of pieces to it, so they need like, depending what they do, right? There's a lot to that, but architect lean and mean, absolutely.
Yeah.
Um, Last one here, equipment. We got our last 60 million slug for this year, so equipment's going well. As interest rates go down, those returns on that equipment gets better too. Like right now with like higher interest rates, usually like cash on equipment is usually like 6 to 8%. But as interest rates go down, like I said, I got one that's like churning off 18% for me.
Wow.
Um, so
So to be clear, so you're saying that this is what you're doing through equipment share, right? You're buying and leasing equipment out,
yeah.
large
And
equipment.
and the way the
With
numbers are right now, I put in $1.30. I buy $10 worth of equipment with the current lending. So I put
pretty
in a
high.
dollar, yeah, and then I take that $10 off my income. Um, so I love real estate depreciation, but I don't have real estate depreciation every year, just depending on when projects finish up.
Yep.
So I guess main point here is lower interest rates help everything across the board. My
Yep.
insurance policies, like my leverage insurance policies, you name it. Like uh the key though is, you know, when we see these lower interest rates come the next few years, guys, don't don't settle for the 5 year fixed, right? Go seek out 25, 30, 35 year fixed. I think that is a pearl I learned from the last 6 years.
That's good. We'll have to have when we have dive into debt a little bit more on another conversation. We'll have to dig into that a little bit because
Yeah,
an important conversation.
we'll
So
dive into that one. If
cool.
you want to learn more, come visit us on our Facebook group, Dental Real Estate Partners. It's a great community. We'd love to have you. That's a wrap.